Hey there, class. It's Phil McDowell, the Mortgage Professor, brought to you by Mortgage Alliance. Mortgages are marvelous. Have you ever seen TV commercials and felt that you're really being conned because they come up with this hurry, buy now, last opportunity, no longer going to be in inventory, put your order in right away? Well, that's really what's happened to a lot of people when the Minister of Finance said he's changing the rules once again with insured mortgages, where the maximum amortization can only be 30 years instead of 35. Now, a lot of people are saying, oh man, this is my last chance, I gotta go. But what do most people do when they take a 35-year amortization? Well, they do bi-weekly payments. True? If you're in the same situation where you're considering taking a mortgage and bi-weekly payments, let me show you some very basic arithmetic. First of all, when you take a 35-year amortization, I'm going to use as a price of a home $400,000. You put your $20,000 down, that's 5%, you end up with a mortgage. Now, your mortgage has a default insurance premium that's added to your mortgage balance based on your amortization and the amount that you borrowed compared to the value. 95% with a 35-year amortization, your premium is 3.15% of what you're borrowing that's added to your mortgage. So in this case, you'd have a monthly payment of $1,728 because on your mortgage is added almost $12,000 worth of default insurance premium. Now, what do most people do? Most people say, I am going to take a bi-weekly payment. And if you're going to take a bi-weekly payment, what is that? You're paying $864 each 2 weeks on your mortgage. What does it do? Well, if you take $864 times 26, which is how many times you pay on a bi-weekly basis, divide that by 12, you'll see that on a monthly basis, you're averaging $872 per month. Now, what does $872 per month do to an amortization? It brings it below 30 years. It's about 29.75. But what have you done to yourself by jumping onto this bandwagon? I've got to have this 35-year amortization because it's limited time only, it's going to be gone, I can't get it anymore. Well, your default insurance premium for 35 years is $11,970. Had you just said, I will take a monthly payment based on a 30-year amortization. Now, you can still pay bi-weekly, but you make sure that your payments equate to that $1,872 per month. What will you do? You'll get a default insurance premium of $11,210. They're saving yourself $760 in tacked on mortgage premium that you had no intentions of using whatsoever, all because you thought you had to rush out and buy a 35-year amortization because it's going fast. Watch your money.